Hello, my name is Maddy Aubry. I am a junior studying finance in the AIM program, and I cover domestic consumer staples. Today I will be presenting Carriage Services, ticker CSV. Carriage Services provides funeral and cemetery products and services in the United States. The company operates through two segments: funeral, which is 76% of revenue, and cemetery, 24% of revenue. The funeral segment focuses on the services to the families related to the consultation, removal, and preparation of remains, sale of casket, and use of visitation, remembrance, and transportation services. The cemetery segment includes interment rites and merchandise, including makers and outer burial containers. The company was founded in 1991 and is headquartered in Houston, Texas. In 2020, the funeral home industry experienced a boost in revenue growth due to the uptick in U.S. death rate as a result of the COVID-19 pandemic. This uptake is expected to continue into the beginning of 2021 as well. Companies within the industry will continue to benefit from this increase. Market share concentration within the funeral home industry is relatively low. Within the industry, Surface Corporation International, SCI, is a leader in terms of market share, holding 11.7%. Carriage Services follows SCI with a market share of 1.6%, and then Stonemore Incorporated with 0.3% market share. This low market share concentration allows CSV to engage in a roll-up strategy where they acquire smaller funeral homes, usually family-owned previously. In comparison to other death companies, Carriage Services is the fastest growing in terms of EPS. Carriage has 3-year EPS growth of 103% in comparison to competitors SCI and Park Lawn Corporation, whose 3-year EPS growth rates were 33% and 59% respectively. Carriage Services sets itself apart from its competitors by increasing their focus on the local aspect of their partners and relationships with customers and focus on heritage. CSV ensures that their partners are dedicated to serving their local customers and have a desire to grow. Dedication to the local customers is important within this industry, as many customers are going through trying times. One way the company is ensuring these standards are met is by introducing an organization within the company that focuses on enhancing the performance of their employees by focusing on increased sales incentives and training programs. Because of their impressive business model and potential for future increased performance and market share, it is recommended that Carriage Services be added to the AIM Small Cap Fund with a price target of $42.81, representing an upside of 21%. Driver 1. Rise of Preneed sales. Preneed contracts are arrangements for funeral and cemetery services sold prior to death that allow families to plan the type of services and products ahead of time to eliminate the burden of planning at time of need. About 15% of funeral services are funded by Preneed contracts, and about 50% of cemetery revenues are derived from Preneed property sales. In June 2020, Carriage Services appointed Senior Vice President of Sales and Marketing Carlos Quezada. Mr. Quezada was hired to build the CSV's new high-performance sales organization and standardized sales system. This high-performance organization is expected to create growth opportunities among all Preneed sales, but specifically strong growth within Preneed cemetery property sales. Preneed property sales can be expected to grow at a CAGR of about 4.5%. Driver 2. Local focus. Carriage Service Incorporated acts as a true partner for local funeral homes and cemeteries. The company looks for partners who are passionate with heritage and willingness and desire to improve. The company offers their local partners to operate on their own with entrepreneurial principles, and they offer support and resources of their corporate headquarters. Corporate headquarters focuses on areas related to HR, accounting, tax, legal, risk management, and IT or website. With corporate headquarters taking on these responsibilities, CSV sees improved margins due to the avoidance of duplication of services. This also allows CSV's partners to focus on growing their local market share, which will in turn increase same-source funeral home revenues. These revenues can be expected to grow at a rate of about 4% year over year. Driver 3. Increased Capbacks growth. Capital expenditures totaled about $15.2 million, with about 60% being allocated towards maintenance capital expenditures and 40% being allocated towards growth capital expenditures in 2020. CSV hopes to increase total capital expenditures to at least $18 million, allocating 50% to maintenance and growth. This represents a growth rate of about 18% from 2020 to 2021. With this increase in growth capital expenditures, CSV hopes to enhance their development of high-quality, differentiated cemetery inventory, and they hope to invest in funeral home aspects of business by remodeling or building new homes in certain areas with high growth markets. To reach an intrinsic value for CSV, a 5-year DCF model was created. Using a terminal growth rate of 1.25% and a WACC of 6.4%, an intrinsic value of $40.65 was reached. Additionally, a PE multiple valuation was calculated using a weighted average peer multiple of 32.58, resulting in a relative value of $28.99. Finally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 19.92, resulting in a relative value of $62.80. By weighing these models 75, 10, 15, a price target of $42.81 was reached, representing a 21% upside. CSV pays a dividend currently yielding 1.1%. One risk related to CSV is their high debt. CSV has a significant amount of debt coming due in 2026. Lack of funds to fulfill these debt obligations could become problematic for the company. Second, changes in customer preferences. Due to the pandemic, funeral services have been limited. This could cause customer preferences to change related to remembrance and burial services, which would have a negative impact on CSV. Finally, regulatory changes. There are extensive and evolving federal, state, and local regulatory and licensing requirements related to funeral and cemetery industry. There could be a negative effect on the company if CSV fails to comply with these requirements and react to any changes. Melvin Payne, a co-founder, has served as CEO since 1991 and chairman of the board of CSV since 1996. Carl Brink has served as co-CFO since 2015 and has been appointed sole CFO effective at the end of the month. He also serves as principal financial officer, senior vice president, and treasurer of the company. Prior to CSV, Brink served as a cash manager for International Paper in their corporate treasury group. Carriage Service is dedicated to providing their partners with the support and resources necessary to give their local customers personalized services. They are also committed to helping them grow and continue to be successful. CSV has the ability to be a stable company for the AIM small cap portfolio. Feel free to reach out with any questions. Thank you for listening to my presentation.